Hello and welcome to Macro Mondays presented by the Gokhstein News Network. I am your host, Landy, and today is November 17th, 2025. And Bitcoin did fulfill our downside target that we talked about, earlier last week. And by Friday, it hit the weekly zone that I was looking for right there at 93.5. And now this week's candle is currently trading under. So Sunday, we did get the strike down into the next big weekly level after losing the main supports over here, 98 essentially to 101. It's technically 98 to 25 to just shy of 101 here. But after losing that, which I've been mentioning for a long time, yes, we can look to the daily around the point of control, which on the daily there's a point of control right and cutting right through the middle here at between 94 and 96. We had some daily levels with the point of control around 96. We got that fulfilled after talking about it earlier in the week last week. It hit that later in the week. And I said inevitably, even earlier last week, on a breakdown of $98,000, we're targeting the weeklies because we were in a compression or consolidation at the highs, and we're starting to look for expansion of volatility through the lows, targeting the next big weekly area. Now, this move is ongoing on the daily, and Bitcoin is in a very key area right now, and that is the $93.5 to $89,000 low side area of interest on the weekly. And that area can be extended below $89,000, which is not only the swing higher low of this structure over here, it's also the swing lower high on the weekly, where we did see a weekly closing high of around $85,000 to $86,000 come in. Here on spot price, it was $86,000 or just slightly above $86,000. This entire zone is fair game. All right. From a daily perspective, it is absolutely fair game. And if we do start closing below $89,000, understand that that's the equivalent of losing this support over here that we saw earlier this year, right? That Q1 to Q2 transition that I was warning about way back here, right? All through spring into summer of 24, I was warning about that Q1 to Q2 transition, right? I said, we're probably going to run into it towards the end of the year. We did. And I said, beware. And we got our Q1 to Q2 transition. That's a lot of liquidity rolling, a new presidency here in the United States, and markets reacted to some of the policies, as well as it was already looking like it wanted to run to those areas as long as it was holding up some of the downside structure that we saw hit at $49,000, which was, of course, the ETF high from January. So the ETF launch high. Now, this is a big zone. Why is this such a big zone? Because if Bitcoin does start to lose 89, especially on a close, right? We're now on kind of the last two big areas and really the last area before we start looking at the bottom side structure here, which is, it's 82.5 technically. So even this area down here, this area is fraught with peril for bulls in terms of market structure on longer term timeframes like the monthly for trending structure. And I'll show you in just a moment why it's so important. But let's get through a few things here. If this area is lost, 89 to 85, 86 is going to be the name of the game here. Look, you want to see if you're bullish on this still holding up as showing potential that we could see a lengthening cycle, which by the way, that's only a potential that cannot be confirmed until after Q1 of next year. All right. So understand that is, in theory, it's a great idea. There are certain technicals on longer term timeframes like the monthly and quarterly where we're still in a compression, and we've had an entire bull market and we've never seen a compressive phase on like the quarterly in the midst of a bull market, which means that it's still coiling up and getting ready to break out. But understand that compression can last for a long time. We're talking about a quarterly time frame, meaning that you can have entire cycles within it. So, but in order to preserve market structure for the possible, potential in, beyond Q1, which is where time frame is Q4 to Q1, for the top, right? For a macro top. But market structure wise, we're not looking at anything wrong. If we closed anywhere like this, it would still be a higher high, and higher low structure on the monthly. But anywhere below 80, 86 here, 85, 86, this weekly area, it's losing all the supports. It's getting expansion, and it's likely going to go and test and test that monthly market structure. So let me just take this off of here. You might remember I called out $92,000. We're going to talk about that on the daily. Called that out as an area inside the weekly to pay attention to. We did get that hit and dip below to around 91. So, it's working its way down towards that weekly. But let's look at this monthly. Again, this is why this is so important. Yes, market structure wise, this is just another higher high. But the last higher low is so close on a close at 82.5 that we start losing around 89 and testing 86, mid 80s. It's very highly likely that this is going to be a tested low. And if we see it break on a close, or a swing in here is fine, but if we see a close under 82 and a half here on the monthly, that's a warning sign. Beware of the next upside moves in lower term time frames, right? And I would say even now, beware of upside moves in lower term time frames. But we'll discuss that in just a moment. But a full structure break of the actual swing trend would come on closes below 74, 420.69. Of course, we know that number very, very well as it's just about the only thing that Bitcoin likes in terms of memes is meme numbers. And in this case, this is getting close to the razor's edge. And realistically, it's in the spot right now where if you are a bull, you want to see this area hold up. I keep seeing $70,000 and then we moon. You do realize $70,000 is a structure break on the monthly, and that is telling you that you have to be very cautious of the next upside move, right? Right. $80,000 is also, it's dicey. It can swing, and put a wick in there, but you don't want to see closes below 82.5 realistically. Can we get deviations of trend? It's more likely now than ever before in Bitcoin's history on longer term timeframes, and we'll discuss that as the week progresses. But you have to go with structure at that point. But this is the big zone, 89 to 93.5, and realistically rallying above 93.5. We now just have to contend with what is currently Monday's high, around $96,000, that daily point of control in the underside of these closes right there, right? That 94 to 96 big daily level, and then the point of control. It rallied into it on the Monday candle, late Sunday into Monday, and then dumped down into the actual range. So it was late Sunday, right after the close, early Monday candle for Bitcoin. And this is a very simple setup. You notice I don't have the Bollinger Bands on right now. I'm going to turn them on in just a moment because I want to show you the confluence here. I'm not picking out any of the topside structures. Not as important as where Bitcoin is currently trading. And we can use a really simple chart for this. It's not difficult. Don't overcomplicate it. This top half of the zone above the fib extension that I have from the prior cycle. For those that don't know what the fib extension is measuring, it's the prior cycle high to the bear market low. So $69,000 to 15.5. That's where spot price came in on the high and the low last cycle. This is a macro extension off of that structure. And what I'm pointing out is a non-standard fib. But this is well back tested by myself. And I pointed out how well it worked for the actual range and defining this range over here, and even being an inflection point for a major daily that turned into a weekly higher low and lower high, including on the way back up, testing it perfectly. And this is the 1.168 or 16.8% above the prior cycle high. Right. So it's basically 69,000 plus 16.8% gives you 88.7, right? I just call it 89, right? And that is, right where this wick low came in anyway. It's right around 89, and 88.7, 88.8 is right where this wick lower high came in. So there is a little bit of wiggle room there, but it's a very, very big area because of the fibs, because of the higher low, lower high structure in this area. And the fact that, we tested the top side of this weekly after recovering above, but never came back down to really retest this area. This is what the bulls want to see hold up. Also, let's go ahead and turn on the actual Bollinger Band set. Now that we have the daily close, you can see that Bitcoin is just kind of hugging the lower second standard deviation down. We see that the lower third is already down below this area coming in. Now it's below the inflection point, $89,000, coming in at 84.8. You can call it $85,000. So this is on the board as a potential down here. Bulls want to stay up here above 89. They can dip down below, but want to see weekly closings hanging above 89 here within this zone. Just to give themselves some room, right? Now be aware of anything, that bounces above 93.5 starts to get right here to $96,000, the point of control. That was a prior point of control. It's a big volume area, VPVR area, yada, yada, yada. But really, then none of it matters. If it starts to trade above here, what you have to pay attention to is this weekly zone up here that was just lost, 98 to 101. Bulls need to start closing back on the top side there. And when comparing this to where the weekly is, you can see why this would be so important, because then they have the ability on this expansion, which we are now getting, this expansion into support. They would have the ability to start trying to claw back some of this structure over here, right? Because getting above the 101 region, we recover this low, then we can go think about these highs over here, right? The 104 and a half, right by the lower second standard deviation, to 109, which encompasses this higher low, 107 to 108, that was rejected in last week's candle. So that's where we could start to entertain on tests that into this area that can close above 101, specifically close above 101. We can look over to the 103.5, right? To the 104, 105 region. Start looking up to the big weeklies, 109, where we have the close open structure, the high, and we have the 107, 108. We can start looking at that as the next big area. And then, of course, closing above 112 would get things back in and around the basis band. Now, still a rejective area, still the bearish half of the bands, but realistically, we start looking at the inflection points up here, the close open right here that's confluent with the close open right here. So we've got what was a swing higher low to higher high, right? And then then the next few candles painted this as a complex high before putting in the higher low over here. But we have a bit of an inflection point up there, 114 to 116, some we're going to call it. And then, of course, there's 116 to 118 up here. Right, so around the and then start getting into the 120 to 121, and this is where we need to see. First of all, this move is ongoing on the daily, but we would need to see this area hold up, start to recover level by level, and then there's the possibility that this on initial expansion, which we see quite often, quite honestly, with a lot of assets and indices, and even cryptocurrencies. When we're going into this compression, we get the initial downside expansion, and then it runs right back to the top side, right? And then we see, do we get a close above 128 and then, actually initiate the expansion to the upside, or reject around the highs and then come down? The other scenario is a bounce out that holds this area and then rejects some of these downside structures. That's just a lower high after a trend break, right? We have an uptrend, then a trend break, lower high, that's your trend reversal setup, and then boom, back down. But bulls would, at least, if they can recover above 101 at minimum, give themselves a shot to try and recover some of the highs over here and the lows of the range over here, to actually work their way back up and put themselves in position to potentially run from one side of the bands to the other, right? So that is still on the board. That is a viable setup because this is not like some small support down here. This is a major weekly level. And it was an inflection point in the market as well for trend. And I do want to point out that this compression to expansion is not like this expansion to compression, right? This was a compression here, right? Where we saw a nice stair step down. Like we went into a compression, but this was expansion to compression into the lower bands. And then we had a choice. We ran from one side of the bands of this compression to the other and resolved it to the upside. So this area right here, where we are in a different structure, we were making higher highs in the current structure. We were making lower highs here with lower lows, building up some bullish divergence within that structure on the daily that bled into the weekly here. And then we saw, a higher low swing, lower low close. The only criteria was, hey, close above this with a higher high, and we have the potential to switch around the swing trend and then start closing higher lows, headed towards the highs, breakout, right? But we go into expansion, and then this was mean reversion to come back and hit the downside compression that resulted in a that hit, that we got the expansion, and then we hit the bottom side as we were coming back into a compression. And then we ran from the bottom side to the top side, higher low, and then just have been grinding ever since. So this is a real big volatile setup. This is not like what we saw over here or over here. It might be a little bit more like what we saw over here, but there's bearish divergences everywhere. This whole way up on longer term time frames, right? So this compression to come back and retest supports not out of the ordinary, and it's just a matter of holding it up while maintaining structure on longer term time frames like the monthly, specifically the monthly higher low at 82.5 on a close and 74 420.69 or 74 4 for most charts. Now, a few other things here. We are getting pretty low on regular Stochh. This is not a Stochh RSI. All right, we already look at RSI. I don't need an indicator of an indicator. This is Stochh RSI measuring close over close price momentum. All right, we have a regular RSI. The last big major low is down here, right? We're already lower than that low coming into a support. So again, we want to see the top half here preferably hold up, not head down towards the $80,000 close to the 74 close, right? Because that's endangering structure on longer time frames. Bulls want to get a bounce and set a low off of this level right here. That would then give them another hidden bull div. It's not anything too crazy, but we start to see that happen off of this level, or in general while maintaining above this last RSI read in terms of price structure, because we would have lower lows RSIs no matter what here. Then we at least we're setting up for a bounce or a continuation of a bounce by the time it confirms, because we likely already see it bouncing on dailies, right? But more importantly, I want to go to the 5-day, because the 5-day is going to tell us a lot about what's going to be going on with the weekly, right? The weekly and 5-day I like to compare a lot. 5-day is headed down towards the bearish control zone. Understand that this is at 85, the edge of the bearish control zone, $85,000 to $86,000. That's where this edge is. Bullish control zones all the way at the top side, that's at $131,000. So this reflects the compression into expansion at the extremes, but not quite even extremes, right? Those are the edges of those zones. We see that on the 5-day here, lower third is now entering into $86,000. That's essentially, we break down, we're closing in and starting to get towards that edge of the bearish control zone. Bulls need to see the same thing on the 5-day they need to see on the weekly, and that's a low set. This is an open candle. The only way to set a low would be to, at minimum, come back and close above 105.3 on the 5-day, right? So this move's still in progress. How do we set a low? This candle's open. The only way to set a low on the weekly is even worse for the bulls. Got to recover above 107.5, right? That daily rally into resistance, into that weekly resistance, right? So But we can get clues as we start moving from the weekly to, the 5-day, the 4-day, right? We're seeing all the same areas. We're coming up with Yahtzee on the bottom side. Understand that this can still fall through, but lower third, it is an extreme deviation away from the 20. We'd be looking for bounces in this area. It's right at $86,000. 3-day, we have oh man, the 3-day is not pretty. The lower thirds all the way down here at 80, which is a weekly area right here, where we saw a weekly close come in at 80,000, right? But it's right in the lower second. Only way to set a low here on the 3-day, a little bit better, would be to close back on up above around 96.8 or 96.750, 96.8. Realistically, you're looking for 97,000. You're looking for this to be testing back up into where the lower first is coming in, which is that last weekly low that was just lost. 2-day, not quite at extremes for volatility. It's just marching down, grinding down the bands. Lower third standard deviations right there at $86,000. And then, of course, we have the daily that is also just doing the same thing. And it's got room, by the way. This is not a hot read. It's getting up there, but it's not hot yet. It's not like overextended on this move to the downside. So understand that there could be more to go. And what we need to look for in the daily here for a low being set as it stands right now. We don't know if this turns into a red candle that comes down further. It would be the open of today's candle. Need to close above, set a low. Or really realistically close it. It's closing above a 3-candle structure. So I would say that even if this was the high, you'd technically get it. But where do you want to see closes come in? It's right here. From here, you want to see closes come in above right around $96,000. That's the lower first standard deviation and the point of control that I've talked about plenty prior and have shown quite a bit. So let's actually go over and look at that point of control. I think I pulled all of that stuff on this chart. Yes, I did. This is a mess. I keep reorganizing things and then forgetting which chart I reorganized. And then I realized I reorganized the wrong chart. All right, so I don't quite remember. Oh, yeah. So this was this point of control right here, 96, right around 96. If you extend this over, it's the same encompassing the full structure. And I think I've shown that quite a few times. But I'll show it just again for this entire area. It's like right around that lower first standard deviation, right where we need to see a low set for the daily. But looking at if this is going to, in order to set a low in like today's candle. Otherwise, it's looked to like around 93.5, 94,000 as the area to set the low in subsequent dailies. But right now, 96.5 or so. If I was going to take and pull this from, this is just showing the breakout to consolidation, and then now we're just headed back down through the levels. Let me go ahead and make sure I'm getting the right thing here. And if we were to go and pull this all the way over, we'll see that this is right there at the lower first. So the point of control, most volume traded, is right where we've rejected to come down and test a value area low of this entire massive structure up here. I know it's a mess because I have this one over here and these were set into different zones, but I'm really, the only thing I want to show you here is that this is right where, we need to see, that's an inflection point for volume, and we need to see that recover to even set a daily low to go test 98 to 101 on the weekly. Otherwise, it's headed down towards $89,000 to $90,000, which is the value area low of this entire structure between these two consolidations. Which this this high over here. Let's go back to a regular chart that isn't such a mess. For the daily, this rally to new highs and then retest down to 98 here. This is interesting, right? And the reason why this is interesting is because this here connects these two ranges, right? And in this case, we came down and hit the top side of this consolidation, which was sitting on the weekly. This was the area that needed, was lost, needed to be recovered, chopped around, hit that same 98. That became the low. And then this, we were walking this down the entire time, right back into this side of this range that acted as an inflection point for the top side of this range and the bottom side of this range. So we're just falling back to main supports for this range now, and it's going to be important that the bulls, essentially shit or get off the pot, like right here, right now. Otherwise, the look is lower, and the move is still ongoing as it stands right now. But we will check back in on this on Wednesday. If you really want to just simplify it, Bitcoin above 93.5 is going to give it a shot at 96 to set a daily low. Then we can start looking at the possibility of testing up the 98 to 101. Need to see closes above the 101 region. That's really what it comes down to, right? That would start to look much better. That would start to turn around stochastic momentum. We wouldn't have any bullish divergences, but some of the higher term timeframes would start to get them off of prior structure, right? So we would start to get them on higher term timeframes, and then watch those build up into something like a 5-day, which will give you your edge for the weekly, possibly, right? And I will keep you informed on the way down, just as I did on the way up. And I don't get shaken out. Look, everybody, when prices are rising rapidly, everybody's like, man, I should have bought more at X price. Like, look, on the way down, you're getting those prices again. So, I'm not saying that this is the area that you should be bidding, because there is a risk here, right? There is a risk that psycho theory is still on, which it still is still on deck, and we go into a bear market until proven otherwise, right? And we don't, and it extends, and we get an extended cycle, which is the door is open for that in terms of structure and compression on higher term timeframes. That leaves the door open without even having to measure or factor in, the known unknowns, which is, well, DATs could be bidding. Well, that's not something we can measure, right? Incorporate into our data set. They could, but their bids are inconsistent. And when liquidity starts to dry up in markets because they're dumping off, it becomes harder for them to really, really buy in the ways that you think they would. They also, a lot of them don't have any businesses. Why? So why would you go to them and invest in them when you can just buy spot? They have to have some sort of value add, whether that be a business with revenue and earnings and all that stuff, or a product, or linked to some sort of like yield that is going to be generated, and can become a vector for yield as well as a treasury. And earning yield off of that treasury that they're holding. Like those are going to be the value plays that people will go for. But a lot of them are going to be under stress if we see MNAVs continue to dump off the map like we have, right? Sailor model is, they just get converted to equity on the lows essentially. So they're going to be fine. They get to enjoy the worst of the worst conversion into equity. And then they get to, everybody cries about dilution until like they're sitting on a whole bunch of equity on the lows, and then the market turns around and takes off, right? But there's not many companies that can do that. And then, well, the Bitcoin Act, well, that's not passed. Well, Clarity, well, that's not passed, right? Like, well, the Treasury, they can do budget neutral accumulation. Yeah, well, we can't count on that because we don't know if they're actually doing it or will do it, or if they're going to wait for the Bitcoin Act. Like, there's so many things that you can't factor into analysis. Those are just vibes, baby. You got to factor in the analysis and what the market's really doing, because that's how people are going to make their decisions on where they're going to deploy their capital, including all of those bigger players. All right. So pay very close attention this week and the coming weeks. Don't be scared out of identifying value, and have a plan for accumulating on the way down at specific levels. Like, have worst case scenario, we're going to go into a bear right here, right now, which technically, structurally, it's just a trend break on the weekly, and we haven't even trend broke the monthly yet. So it's still a bull market and bull market structure on the weekly, and on the monthly, and it's just a trend break on the weekly, right? Although it's not looking great. That's where we are right now. So identify the levels to the downside and start making a plan for how you're going to accumulate. There's only so much Bitcoin. And it is what's driving the crypto markets. And it is the most, and I don't care what crypto you're in. And if you hate Bitcoin and all these other coins are your favorite because they're better than Bitcoin, well, great, that's fine. But you live in a market reality where Bitcoin is the main token that is the most desirable, right? And the rest are going to follow Bitcoin's direction until we see a major shift in market structure for them and alts become their own asset class aside from Bitcoin, right? But for now, you got to look at Bitcoin. So you got to identify value on the way down, and even the worst case scenarios, whether you are the most permeable person or not, right? And that's where you start accumulating. And don't just, whip it out right here, right now. I'm going all in at this level. You need to be intelligent about it. And I'm not here to advise you of anything other than looking at the charts. But that advice is don't cry about the price when it's on its way down and the opportunity presents itself and you don't take it, right? And then things run away and they're like, I should have bought more, or I should have bought and I missed it. No, this is when you want to pay attention. These are the most beautiful times, is in the bearish trends. All right, I'm going to leave you with that, and I will catch up with you again on Wednesday for the Wednesday check-in. We'll see where Bitcoin, of course, heads, and we'll take a look at Ethereum, and I'll talk about, kind of what's going on with Ethereum. And something I think that is actually pretty interesting on Ethereum for the weekly is that we are at a lower second standard deviation after a massive, and this was a massive move down on expansion, and then the slingshot right back to the top side, which, by the way, bears, you got to understand, bulls are in the zone where they could do that to you as well. And I'm net short, so I'm very aware of this, right? I'm talking to myself as much as other bears, because I'm net short, and I'm bearish on this current trend. And yes, I'm a long-term bull. This is a mess of a chart, but we're back by the lower second, right? And we're on a major level, 3K to 2,700. If that drops, we're going to get expansion into these downside supports. 21, you call it 21, 23, 24 area, kind of the main areas down there. But this is expansion into compression. I actually want to see them bounce here. That would actually look really good for Ethereum. And we'll talk about that on Wednesday, provided it's still in that area. Otherwise, set it down. Just don't want to see below 2,700. All right, ETH heads. Otherwise, it's likely going to head much lower. All right, talk to you on Wednesday. Keep your head on swivel. We're in one of the main areas of interest to the downside, and we'll see what this area provides over this week. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all that being said, Landy out. Take care. Talk to you Wednesday.